Okay, good morning, subscribers. It is Tuesday, February 18th. I hope everyone had a good weekend. Obviously, yesterday and Monday we had the day off in the U.S. markets. There was a little bit of action going on in the European markets and as well as in Japan with Bank of Japan intervening there. So, but in the broader scheme of things, really nothing has changed a whole lot. At least not so far in terms of overnight action. So, my main theme this week is going to be that I'm looking for stocks to settle into more of a sideways to downward pattern again over the next days, maybe weeks, and build a better base because we've had a very strong rally here. You can see in the S&P over the past few days that I really think needs some sort of consolidation now. Is it possible that we rally, to new highs past the 1850 area and then consolidate? It sure is, but I already want to be a little more cautious here and sort of be mindful that we could be in for, a somewhat prolonged period, and by prolonged I mean, like I said, a few days, maybe a couple weeks of sort of sideways to downward action. That's my base case. Again, if that, we have to measure that again, every day. But that's where we are. If you look at the QQQs, the Nasdaq 100 just looks like we're overextended as well. We've broken the new highs, new long-term highs. There. Russell 2000 still below, and that's a little bit concerning, but it's again still retesting the lower end of that uptrend that we've talked about, and that's pretty much that. So this is bullish until it's not, i.e., it's also bearish until it's not. So until we start breaking above here, we have to be a little bit mindful of that as well. But again, in the picture, nothing has changed. We bought a dip that I talked about here, which was a great rocket launch setup. That's those of you that are familiar with this trade setup certainly have heard me talk about all last week or the last 2 weeks, and that's been very successful. So there are, as per my video yesterday, there's a few things in the healthcare sector that I really want to look at. I'm going to quickly go through those, and then we'll look at the open positions right now, all of which are, I think, still looking very good. So Humana, I talked about this in the video yesterday that I sent out on President's Day, and you can see basically you have a 1-2 punch rally, sort of marked by these two after earnings that look good. We also now on Friday broke out of this consolidation area here, so that's very good. Then United Health also looks good, and there's a whole bunch of these stocks, even Gilead Sciences, and I might write a little research piece on that. But again, here too, you have a good rally past resistance in United Health, and so that's the kind of stock I want to focus on this week. See if we can follow through buying. In terms of open positions, Chipotle Mexican Grill continues to struggle here, getting past out of this resistance area or consolidation area, I should call it. But it looks good. It really would take quite a nasty reversal for the stock to start looking bearish, and by all means that's possible, but that's not my base case. HCA Holdings still looks good. Again, my reason for entering this trade is because we had a bullish reversal, i.e., a rocket launch setup with the long tails here, a couple of them, and then follow through buying a couple days later. And so here we are. We're sort of bumping into this mini resistance area, and we'll find out how mini that is if and when the stock, reacts to that a little bit more. Goldman Sachs continues to be, a story of lackluster performance in terms of both in terms of absolute and relative, relatively speaking. And you can see it's just, we busted out of this mini area here last week, but we're now consolidating above it at sort of the next resistance, layer resistance. So it's nothing super bullish, but it's just something I think should be able to play catch up if this market can kind of continue to churn higher. So we'll see how this acts. We have a very defined stop here for breaks below these doji candles, and obviously this stock is something not to be involved in anymore for the time being. ABX and the gold miners, and there's other other commodity stocks that are looking very good. But my base case here was we've talked about this all last week, and I think even before that, this resistance area that's actually now been overcome with last Friday's pop. We didn't close at the highs of the day, which which sucks. But again, the stock is working and doing what it should be doing. So this trade too looks good. And last but not least, what I opened last Friday is long position in Ryder because the transportation stocks are looking better again. Obviously, hell of a rocket launch reversal here with the long tail and the follow through buying, and we're now right here at this next resistance area. Looks like the stock is certainly trying to push past this. If it does, then it can work towards the mid 70s again. So that's what I'm looking at here, and also in terms of what I'm looking at today, I'm still extremely pissed at myself for not having to be able to get back into iRobot IRBT. To give you an idea of how good this looks long term, we have to really scale back, and you can see on the weekly chart, this is my base case. You can see the stock has just last week really blasted past this, and it's a little bit tricky to buy it up here. I don't want to, because the stock is fairly volatile, as you saw last week. We made like 7 or 8 or something percent within a matter of a few hours, and then I closed it again. So I don't want to chase this too much. I really want to just see if we can find a better entry point. I may have to retest this area. I don't know. But I want to be mindful of the fact that it's a volatile stock. Maybe we'll create just a 5% position and then work ourselves higher as the stock continues to build a better pattern. So anyway, that's all I got. Any questions, as always, please let me know. And have a great trading week. Take care.